Okay. Let's leave the bangers as we are going to the chart, because the chart is pretty banging today. What's up, everyone? Good to see you. So I'm starting a little bit late. Of course, it's 7:30 instead of 7 p.m. But I literally just came back from a speaking gig that I had in The Hague in museum. It's like a museum, and they had a big dome, and I had to speak there, 300 seats. So I literally just came back, said to my fiance, yo, I'm going to be online for about 30 minutes, half an hour, talk about the waves. Then we can go to the gym, have dinner. We're going to have burgers tonight, chill a little bit. We're watching the Beckham series. We're now at episode 3, and actually it's quite good. So that's going to be the evening, bit of chilling, and then off to bed. And tomorrow morning 7 a.m. a next update. So let's see where price is going to be. What's up, everyone? Thank you for being here. Good to have you here in the live stream where we are going through Elliott Waves, and the current price action is definitely very interesting. Not only for the short term, but potentially also for the higher time frames. And we're going to cover all of this. It might be a bit complex to give probabilities more like at certain time frames, but I'm going to do and try my best. So, hasta la vista, Barbie. You were indeed the first one. Of course, I'm setting up the stream. I have the countdown, but very often I'm behind the screen, but still do some stuff on the background to set everything up. Tommy Marin, good to have you here as well. Chillfu, let's go. And I saw stream only lag for me. Let me have a quick look in the corner of my eye to see if I lose any. Nope. I think that may be on your side, because I don't have any packet loss at the moment. Let me know. Sonder, what's up? How you doing? Good to have you here. Flotty, DJ Koen, yup, back in the house, man. Good to have you here as well. Flotty always, by the way, in the comment section with the emotes. And not only in the comment, also in live. Absolutely, he's always there. J-Mob, good to have you here. The weekend is here again, almost. And the question is, where are we going to range this weekend? Will we range here, like 28K? Do we go up or do we go down? Hey, dag is hij dan. MX Nix. Hi, Koen. Looking forward to your analysis today. By the way, I meant Gouda, of course, instead of Zoetermeer. I mean, Zoetermeer is around the corner. So, of course, if you have business in Zoetermeer, feel free to give me a call. But, I live in Gouda nowadays. So, but it's quite close to one another. I was in the train just now coming from The Hague, and we stopped in Zoetermeer. So it's around the corner, really. DCC Trader, good to have you here as well. Perseo. Buenas. QZ World, what's up? J Moore, big bearish divergence on Bitcoin. Interesting, taking the same levels twice. Interesting, taking the same level twice now. 29.5K, unless it drops here. Yeah. We have the bullish and the bearish divergence, right? That's the thing here, I suppose. There's like a divergence both ways. Let me have a quick look. Yeah, so we have a divergence both ways, basically. And the bullish divergence, the thing you can see in the background, right? I only have one thing on the back of my screen, and we go into the analysis in a bit. But I have the 886 on my screen, and the 886 is important. People that hang around on the stream for a longer period of time than being the first time here. If you're the first time here, by the way, welcome. But I like to talk about the 886, which we will definitely do here once again as well. 1 second. So yeah, the 886 is okay, that was the wrong. The 886 is an important level because it is commonly touched in a wave B or in a wave X, and it is rare for a wave 2, meaning the fact we hit it here increases probabilities. We will find more upside. Maybe not directly, because we also have the double bottom, but eventually. We never know really what happens, of course. The funding rate is really negative. The market is shorting. That's interesting, right? Interesting confluence. Might be stopping all of them out. Nomad Hamza, where are you from? The Netherlands. Gabriel Chalaru, could be larger ABC, A from 31 to... I don't see 15K happening now. I think we will by far, like the probabilities are a lot higher to take 31K before you even go back to 15K at the moment. Dasa Gaming, catching one live again. Oh, by the way, stays on 2K16. What's up? How you doing? Good to have you here as well. Chifu, you fix your stream. Very, very nice, or at least your internet. Guys, let's jump in to the content, right? So we're going to be live till 8 p.m. Usually, of course, I'm online for an hour, but it's going to be a bit shorter. Hectic day, not going to lie. So the first thing I actually want to talk about is how the probabilities changed when price was ranging here. So of course I uploaded the video when price was hitting the point of control. At that moment in time, this was still a wave B target area for potentially a move down. The beginning wasn't too clean as well, very impulses. Yes, we had a small little bit of bullish divergences. And of course, you also noticed like my feeling with the bullish divergence over here and also the bearish one, which you can see over here. Now, of course, this moves to the upside. My feeling was like, a bit in the middle between are we now bullish or are we now bearish, just based on local structure here and the structure here. It just, probabilities are, for me, it's quite interesting to take the double bottom still, but probabilities for at least moving above this order block started to increase the moment stuff happened over here. And I just want to run you through my thoughts, which hopefully, teaches you something in how I look at certain things. So first of all, and it's not much actually. So first of all, in the video, we spoke about different scenarios. I won't open all of these pictures as you've seen them. But then this happened over here, right? Let me actually make it bigger. So at the moment in time, price moved above this point of control, right? Hit the order block, came down to retest the point of control. And that's important. So after I said over here, right, retest of the point of control, looks like it might want to take the high at least once more, which is the local high over here inside the order block that I was talking about. Breaking the point of control would give confidence for the lows, meaning if price would drop below the point of control, I would be looking for the double bottom at 28.1K. Over here, I then said, took the high, moving above the order block now, and I can imagine it might take the local high. Eventually, the point of control moved to the upside, quite interestingly, but the moment the point of control moved, and you can see I was on my phone already, I was traveling to my speaking gig, and while traveling, I was like chatting, like yo, yo, yo. But the point of control moved from down here, 28.4, to up here. So now you're like, okay, wait, now out of nowhere, we're below the point of control again. But what happened locally here, you were below the point of control, yes, but you were building bullish CVD divergences locally over here, right? Look, higher low in price, lower low on yellow, lower low on blue. There was absorption of market shorts going on. Yes, market shorts absorbed by a bigger limit long, which eventually made me think like, okay, probabilities are relatively high to then move above the order block, right? So that was my way of thinking. Eventually we moved above the order block, some other chatting over here, which is less relevant for what is happening now. But eventually we did indeed move above the order block, which we now are, well, basically retesting again, I suppose, revisiting. So let's keep this on the chart. This is quite interesting as well. So price moving towards the upside, ranging inside the golden pocket, still building bullish divergences, by the way, which you can see here as well. So over here, if I go to even the 3 minute, then what you can see over here, price is making higher highs, but look, higher lows, higher low on price. Look at the yellow line, low, 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 right? Higher low on price, lower low on the CVD brings you a push to the upside. Now price is moving down once again. It's now, of course, basically retesting the order block that we have over here. So let's see if it holds, because I think if the point of control is lost, we might look for the double bottom, which we have over here, by the way. So yeah, quite interesting. So this was my way of thinking the moment when price was ranging over here and I saw what was happening. This is what kind of went through my head, keeping an eye on the CVD divergences, keeping an eye on the point of control, and of course the order block, which eventually has been passed. Now let's go through the Elliott Wave scenarios. Of course, as I just came back from my speaking gig, I did not change any of my analysis, but that's of course no problemo, because we just do it live on the stream. By the way, one thing that I like to say is the following. Pam pam. Hoppala. And as you can see, the 886 has been hit twice at this moment in time. We have the 886 touch here and the two 886 touches here. Now, the lows over here could be a potential wave Y. Let's see if I can find a scenario here where you then have a W, you look for a W, X, Y, zigzag, zigzag, flat, and then eventually double touch 886 and you move up. In general though, same with the 886 touch here, as I always say, in general, the moment an 886 Fibonacci retracement is hit from, of course, a clear pivot from, in this case, the high to the low, and over here, this one, from the low to the high, you really got to start thinking about this potentially being the low of a wave B or an X, or this being the high of a B or an X, because it's a rare target for a wave 2. And the fact it's a rare target for a wave 2 lowers the probabilities that any move coming off the 886, which funny enough we now have on both sides, right? So it starts to be quite complex. Any move from the 886 has a higher probability of being corrective, which therefore means the 886 is touched. Any move coming from the 886 is likely being a C or a Y, which means you're then going to revisit the double top, or in the bearish scenario, you're going to revisit the double bottom, right? So the 886 in Elliott waves is very, very important, as by far most commonly an 886 is giving you a hint that if price moves away from the 886, it will revisit it later, because the move that comes out, or that comes out, like, how can I say this? The bounce coming from the 886, either from the up or the downside in this case, has a higher probability of being corrective. There we go. I spoke so much this afternoon at the speaking gig that I have difficulty to speak. So yeah, that is what's happening more locally. Of course, now the 886 is touched both sides. So now the question is, which one will be taken? We can only wait and see. Let's go through the Elliott wave scenarios, and let me remove the 886s from the chart. This is the double bottom. So let's have a look, shall we? And I do think it's important that we let's start on the 12 hour. Yep. So we are going to run through all the scenarios, go through the probabilities, because what's happening locally is actually quite important. TM Skillet, I am absolutely Azer Koenz. Holy shit. How is that possible? He knows. He probably saw my logo. TM Skillet. Is that Trackmania Skillet? Wait, I got to put this on the stream, man. TM Skillet. I see in the corner of my eye, I see Azer Koenz. Yes, man. Skillet. Wait, let me show you something. For everyone here, they don't know. They don't know. Yo! TM Skillet. There's only one. Third at ESWC, third at the World Championships of Trackmania in 2013. I mean, there's only, I guess, one Azer Koenz that can show that check, right? So nice, great to have someone from Trackmania here, not gonna lie. Man, I'm lying. I can't this evening. But let's stay in touch. You can Discord in the description. You can PM me. We can play some Trackmania. Yo, what the hell? Someone from Trackmania here. Okay, before I saw that in the corner of my eye, and Trackmania is, I was a professional gamer in Trackmania for 11 years. So it's great to see someone from the community here. Okay, you can like DM me. We'll have a play somewhere. We'll play somewhere. But okay, for now, this is of course Elliott Wave stream. Let's jump in. So, couple of things I like to add that are potentially new to the higher time frame scenarios. First things first. We have, I don't really like this one. So first of all, we have this scenario that I like to speak about. So over here we have a running flat. Running flat is a 3-wave structure in A, 3-wave B, and then a 5-wave move in wave C, where wave C does not take the low of wave A. So in this particular scenario, what we're then looking for is a zigzag in a wave A with a diagonal in the end for a wave C. Then you have wave B, which by itself is an incredibly weird type of zigzag structure. And then you have a 5-wave move to the downside in a wave C. This is for the bullish scenario, and I suppose between the different bullish scenarios on this time frame, this is quote unquote the most likely. The problem with a running flat is that by itself it's a low probability scenario, because an expanding flat ABC is most common. Then you have the running flat where wave C just goes below wave A, but it's more like a channel-like structure where you grab the highs and then grab the lows and move. And you have the running flat, which is what we're looking at right here, which in general you just don't see it often. Which therefore means from an Elliott Wave point of view, this is not gonna be your first pick, right? Now another scenario that sometimes pops in from Jay-Z, which I think is a great scenario, but doesn't really work on my chart, is having a WXY with a triangle in Y. So you then have an A, B, C, D, E. The thing is that on his chart, you have a big wick here. Also on Bybit, you have a big wick, right? And the thing with the big wick, why it's important, is that in a triangle, you then have wave A ending down here, and then you have B, C, D, E, meaning wave C ends above wave A, which is important because on my chart, you can see the low is a lot higher, which means that wave C ends below wave A, invalidating a triangle, because this is not allowed. You're not allowed, or wave C is not allowed to take the low of wave A, which is the reason I'm not really looking at this. And for the bulls, this is the preferred scenario in a bullish scenario, where this is then your low. You're going to be looking for a move towards the upside. And if we then look at that move to the upside, it's a bit awkward, but I suppose that also from a market maker point of view, if you want to make the Elliott Wave's life difficult, then what you do is you're going to have some rare scenarios on top of one another, and just let them play out, because you don't know, right? But in this scenario, the low is here, right? You're going to be looking for a move up. Now what you see over here is an expanding leading diagonal, which also is a rare pattern, right? Based on statistics, based on probabilities, based on Elliott Waves in general. You will read it if you do the research. Expanding structures in general are rare. Running flats are also the most rare flats. So it's like rare on rare, right? Lowers the probabilities. Now in this scenario, you're then going to be looking for a 5-wave finish structure. Inside the box, 5 waves finished, nice. Wave 1, end. Then you're going to be looking for a wave 2, before then a bigger wave 3, to the upside. Most common target wave 2, 05786, 27.4 to 26K. Now, an alternative to like the alternative bullish scenario where you're not going to drop down to 26K is where this is a wave 1, 2, 1, 2, and you're going to be looking for continuation to the upside. And I bring this up just in case, you never know what price is going to do. It's not pretty. So we are going to talk about probabilities after I covered all the different scenarios, because it's Elliott Wave probabilities. And I keep saying this as well, just to make sure that I do not mind price going to 50K or price going to 10K. You know, I trade the volatility as a day trader. I have no emotional connection to Bitcoin whatsoever. It's just a chart which goes up and down, and I try to trade it. The thing is that, of course, Elliott Waves has certain rules, and the rules and patterns are bound to probabilities. So the probabilities of Elliott Waves, also in a double 1-2 here, it's not nice, right? It's not nice Elliott Wave counting, which is annoying. As an Elliott Wave counter for so many years, it's annoying when this stuff happens, because here what you're looking at is a wave 1-2, another 1-2, then you want to see a 3 up, right? So this is the beginning, like a 1, 2, 3, 4, and you want to see 5. That's basically the general idea, right? Moving up for 3, up, 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 new highs. The thing is that the blue count is a lower degree Elliott Wave count compared to the green count. So in green, 1, 2, 3, 4, 5. And then in wave 3, we have the blue count. Now in Elliott Waves, you have different degrees. If you use, for example, the numbers over here, right? And you click on, you go to the settings, you go to degree, then you will find a whole list with different degrees. Elliott Waves is not only bound by price, it is very much also bound by time. By all means, we're doing analysis on different time frames. So any analysis or any analyst, Elliott Wave analyst, for example, I don't know if they're out there, but saying that time does not play a role in Elliott Waves clearly have no idea. Because if you only say it's price bound, then why do you count Elliott Waves on different time frames? Why do you go to the daily and the 5 minute if it's not time related? You know what I mean? So degrees are very important. Time is very important. And the thing with this double 1-2 is that the lower degree wave 1 and the lower degree wave 2 are longer in price or time compared to the higher degree wave 1 and wave 2, which is not nice because it should be a lower degree, meaning they should be smaller in time or price. And if I pull a trend-based fib from the low to the high of 1 to the low of wave 2, drag it to the right side, you can see that the blue wave 1 is longer. It wicked above. Of course, it's a wick. If you go to the line chart, that's not the case. But nonetheless, on a line chart, let's see actually if I change the pool here. There we go. So on a line chart, it did not hit the 1-to-1. But in my experience, I've always done analysis on a candlestick chart, not a line chart. You hit the 1-to-1. So the second wave 1 is longer in price. Let's actually see if it's also long, and it's much, no, wait, that's a 0.382, and it's shorter in time, but it's longer in price. It's not really what you want to see. This wave 2 is longer in time. Take a fib time from the high of 1 to the low of 2 to the high of the blue one. You can see that this wave 2 is 161% like longer, or I should say 61% longer than the green wave 2. So a lower degree wave 2 being longer in time than the green wave 2. It's just not nice. Take a trend-based fib from the high of 1 to the low of 2 to the high of the blue 1, and you will see that the lower degree wave 2 is also like bigger in price. So it's not nice. So it should be a lower degree Elliott wave count, but wave 1 is longer, wave 2 is also longer in both price and time, but it should be a lower degree. So it's quite annoying. If this plays out from an Elliott Wave perspective, that would be quite annoying, not gonna lie, right? But what do? We trade the chart, and that's why the local price action for me is currently so interesting, because of course the local price action decides the probabilities eventually on the higher time frames. So between a double 1-2 and an expanding diagonal, it's very difficult to say which one is nicer. This one is rare, but a double 1-2 is also rare. The way that it is built over here, where the 1-2-1-2 is not nice. Sometimes it's the way it is, but it just does not look good, right? It doesn't look good. So if we then zoom into this structure, we first go over the bullish scenarios, then I'll of course go to the more bearish scenarios as well. So if we then zoom in to this structure over here, That's the bearish one. Oh, here, bull. Because of course we're going to talk about the bearish scenarios as well, and you'll notice some important differences. So this is the bullish scenario more locally. You had this news event, of course, like the fake ETF thing going on. Was hard to miss, really. So we had this big moment to the upside, which came back just as quick, right? Very nice, actually. So from this low, the bullish scenario is, of course, then continuation. Now you also see I mix it with a bearish one, because you either have an A, B, and then a wave C, which is also a 5, 3, 5, but then you move down, or you have then a 1, 2, 3, 4, 5. So it's basically, you know, both are a 5, 3, 5. It just depends on the impulsivity to the upside if it's a C or a 3. Now in this particular scenario, what I don't like here is this first move to the upside. So, and also locally what happened here, it's been quite tough to have nice waves forming on the chart. Sometimes they form very nicely, like 15.4K, that was very nice. Very clear as well. This is not too great. So over here, you have the low. 1, 2, 3, 4, 5. Does it have potential? I mean, yeah, we're going to be looking for another expanding diagonal type of structure with a very, very long wave 5. It's not impossible. You know, it's just, again, an expanding structure on the chart, which is not common. Then you have this very long range, which doesn't look too bad, to be honest. So you have then a zigzag, zigzag, and then a flat A, B, C, finishing Y, and then you want to see a move up in either a wave 3 or in a wave C. Now, which then, of course, is bearish. The bullish CVD divergences, which is not that one here, might help. So we have bullish CVD. Between this low and the higher low, the target is this high over here. Now, we also have at the same time the bearish CVD divergences. You know, both of these hit the 886. And at the beginning I mentioned, the moment you hit an 886, probabilities increase to to take the double high or the double bottom over here. The thing is that, of course, over here you could have a WXY where wave Y does not take the low of W. And here there is basically no structure. This looks like an impulse to the downside. You move up, there's a big amount of space in between, not like a range like we had here. So for me, the probabilities are a bit higher to move up once more to at least take this high. Compared to taking the double bottom here. Of course, the double bottom can be taken for liquidity and a move up, but I do expect the high over here to be taken at the moment, which could then lead to the bullish scenario. That is the question, right? Like, what's the reaction gonna be? Very difficult to say at the moment. It's this, like, many videos have been I've been covering this range for a long period of time, 3 videos a day, and sometimes I go from high time frame to low time frame in videos, but the last couple of videos were mainly focused on this range because it's so complex. So from this low, if this is a 1 or A, price retraced to the golden pocket twice, could see a bigger move towards the upside. So again, probabilities are on the side to take this high. The question then is, what's next, right? Are we going to reject or are we going to continue? And that is something that it's very difficult to say at the moment what it is. Yeah, of course, no one knows what price is going to do, but it's with this structure being quite difficult to count. Of course, there's a bearish scenario here as well that I still have in the back of my mind. So on all the different time frames, the bullish scenario, you have a running flat on the 12-hour, you have an expanding diagonal on the 4-hour, and then here on the micro, we're currently on the 30-minute, we have this going on. Now you can also see wave 2 is incredibly long in time, which is also not common for a wave 2. Usually a wave 2 tends to be quite short in time, simple, and deep. Now, it is deep, hit a golden pocket, common for a wave 2, but it's very long in time and it's complex. Not impossible, absolutely possible. It's just a little less common, and especially the length of this wave 2 compared to this wave 1 is something to, you know, take notice of, I suppose. And if we then zoom in to what we saw over here at the lows when price was forming, then it's, you know, it has to be some sort of 1 2 1 2 1 2 building up, because look how long this move has been kind of grinding. Let's look at the volume here. Volume increasing, but at the lows 1 2 3 4 5, that doesn't work. You have overlap between 1 and 4, so then you have to think about diagonals, but a contracting diagonal is not possible here. And then a 1 2 3 4 5 retracement. If I take a trend line, do it like this, and we do like this, then already just by looking at the trend lines you can see it's an expanding diagonal. So yeah, it's not nice. So then you either go to a 1 2 1 2 or again expanding, you know what I mean? Shoo. And then what did happen is price moved down and you build bullish CVD divergences. This is like, look, for the newcomers here, usually we have a very clear idea. And now I do have probabilities, which I'll talk about in a second. But oh boy, did price, you know, make life interesting. So here we did have bullish CVD, higher low in price, lower low on the CVD in yellow. There's market, or there's absorption going on of market shorts with a limit long order pushing price to the upside. That was the first little hint that price was going to move up, because if you zoom out, what you see is lower highs on price, but yellow, higher high, higher high. So bearish, 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 bearish. And then the moment you see this, you're like, you know, we might be moving towards the upside. But yeah, again, it's not nice and clean from the lows. And just because of this not being either a clean impulse or a nice diagonal, but, you know, some weird structure, and also here, not a clean impulsive move to the upside, even though we did have bullish CVD. You know, the probabilities of taking the double bottom were definitely there, but now we touch the 886 up here, which changes some of the narrative around this range, because the fact it hit the 886 increases probabilities to take this high. But if you remember, this high had the naked point of control somewhere here of the news event, right? So it happened while I was recording the video here, right? Price pushed towards the upside and hit the point of control of these two candles, which is always going to be important resistance. So price moved to the downside after, but now basically the resistance has been cleared. So then the question really is, what's left? I did have, or used to have, target boxes here. And target boxes are in very important support and resistance areas. So this wick hit two of my target boxes, rejected incredibly nicely, not gonna lie. But now, because those target boxes have been hit, one was over here, the other one was literally at the wick. Because they have been hit, they're cleared, right? So any naked point of controls, volume levels, horizontal time frame levels, they're cleared. So it will be interesting to see what price does if it gets up there. Of course, if, that's the question. But if it gets up there, the question is, will we build more bullish CVD divergences, or are we going to reject, come back bearish CVD? Because I do like to use CVD in my Elliott waves, because it also helps with the probabilities of moving up and down. So yeah, long story short, the bullish scenario with this move to the upside here is gaining a bit in probabilities, because now the probabilities are higher to take this high. Even if it comes down and takes the double bottom, the fact that we hit the 886 here increases probabilities to take the high, decreases probabilities that this is a 1-2 scenario, where this is a way like 1-2 1-2 and a move towards the downside. Because for a wave 2, the 886 is a rare target. So probabilities increase to take the high. Even if you would take the double low, probabilities increase to take the high. And then the question is, what reaction do we get? And that is all about trade management. So if you're already in some sort of a long position and price takes the high, yes, there are still bearish CVD bearish scenarios in this area, which I'll show you in a second, because now I want to zoom out again and go over the bearish scenarios. Okie dokie. Bullish scenarios, just as a repeat, ABC running flat. Expanding diagonal for me has a bit of a higher probability, I suppose, than a 1-2-1-2. But if we get continuation, 1-2-1-2, fine. It's not nice, but it works. It can be a 1-2-1-2. It's just not nice Elliott waves. And then this is the beginning of your 3. So you expect impulsive continuation, right? And then more locally, probabilities are higher to take the high. Then we got to observe the reaction. If we get continuation, then we can expect this high to be taken, which would really lower the probabilities of any move back towards the downside, okay? So from an Elliott wave perspective. If we then zoom out, go to the bearish scenario, then here we have the bearish scenario. High, ABC to the downside, which is a zigzag structure. And what we are then looking for is 5-wave A, 3-wave B, 5-wave in a wave C to the downside. Now a 3-wave in B is possible in a WX zigzag in wave Y. Preferably this is your high and you don't revisit the high. Again, taking this high would really change probabilities for the bullish and the bearish scenario, much more in the bullish favor, depending of course how we get up there, but it's quite high, 30k on my chart. If you start closing here, I think probabilities of taking the high and continuing are much higher. So in this scenario, you want to see price moving back down, wave C target area between 23.5k and 21.9k, double bottom over here at 24,750 as well. So in this particular scenario, there's some liquidity down here, which Bybit already took, as we got a wick on Bybit over here to 23.6k. Now, most commonly based on statistics, these type of wicks tend to fill later in price. You get a big wick, you see a 3-wave structure and you fill the wick. And you also have the double bottom, which is like a magnet for price. For everyone that is new, I really recommend to build statistics in general. I love building statistics. Because it helps you in trading. Now you have a big wick here, of course, as well, which tends to get filled, but also here at the bottom. Now, if we go towards the statistics part, right? So we can see this over here. We have a wick to the upside, which eventually got filled. And if you just go back at the chart over here, wick, 3-wave move down. And you will see many examples of this happening on the chart on different time frames. Bit of a wick over here, move up, down, wick here, 3-wave move down. It just wick here, 3-wave move down. This was a second wick, it filled the first one. So big wick here, 3-wave move down, and you will just keep seeing these type of patterns. So the probabilities of filling a wick are quite high. And Bybit, of course, now has a wick sitting at that double bottom level on my chart, because it wicked through here, which increases probabilities of a move to the downside. But then of course locally you want to see an impulsive move to the downside. So the price action more locally is so important now for macro bull or macro bear, basically, or high time frame, I should say, because after wave B is in, you're going to be looking for impulsive structures to the downside, right? 1, 2, 3, 4, and eventually a wave 5 down here. So from the high, you want to see a 1, unless you're going to somehow swing fill your pattern this high and then create a 1. But if you take this high, probability wise, starts to increase for the bullish scenario. If we then zoom in to this structure for the bearish scenario, then what we're going to have is this, not that one. And I remember I will go into the probabilities as well. So we then have a flat W, X, zigzag Y. This is the most common target area for a zigzag in wave Y. And now you're going to be moving to the downside. Now price action did hit the rare target of a wave Y, or less common I should say, which is the 1.618, which I will get on my chart over here. So the 1.618 has been hit. But funny enough, all the candles have closed inside the common target area for a wave Y. So the wave Y most common target area is between the 1 and the 1.236, with the 1.618 being less common. It did get tagged. But for the internal zigzag, the subdegree wave of wave Y being a zigzag ABC, this was your target area, which has been hit. So we can't yet deny the bearish scenario, right? It's still there, very much alive. The question is what's happening locally. So we're going to zoom in. And now we're going to talk about the probabilities of this range then, right? So we have the first bearish scenario, lower probabilities at the moment, 1, 2, continuation down, where this is your 2, so you're going to be looking for another 1, 2, and a move down. It has to be said that if this is a wave 1 to the downside, it's incredibly short compared to the range you have in a wave 2. Of course, this is also a wick on the higher time frame, which has therefore probabilities to get filled. So not really too happy with this being a wave 1 because it is so incredibly short in time. It would have been much nicer if you get a bit of a wave structure, then a retracement. That would give much more confidence of a proper wave 1, right? The second thing is that over here, if this is a double 1, 2, 1, 2, and then in blue, let me actually clean up the chart just a little. If you are then looking for a double 1, 2, 1, 2, 1, 2, and then a move down in a big 3, then what do you see? You don't see a nice leading diagonal. And what I wrote over here, at about 3 is something you may have noticed, but I actually didn't mention it in the previous video. I've mentioned it before, but not in the latest, is that the double 1, 2 setup is not a diagonal shape. Preferably, the second wave 1 takes the low of the first wave 1. The fact this didn't happen lowers the probabilities for this scenario. So what you prefer to see is a 1, 2, 1, 2, and then a move down in a bigger wave 3, where the second wave 1 takes the low of the first wave 1, and also the second wave 1 and 2 are shorter in time / price compared to the first wave 1 and the first wave 2. But over here, this low is much higher, of course, than the low of the green 1, which lowers the probabilities of this scenario, increasing probabilities. You're going to take this high, as mentioned in Discord, and now you also hit the 886 locally, which increases probabilities more that you are going to take this high and invalidate this particular scenario, which then brings us to potentially still this scenario in a 1, 2, 3. I don't really like how long wave 2 is in price compared to literally one candle of wave 1. So that, like, time-wise, it doesn't really work nice for me. It has like lower probabilities of playing out. So first of all, probabilities are currently higher to take this high. And then secondly, probabilities of this scenario being a 1, 2 for an impulse down in 3 are at the moment lower as it stands because wave 2 is so enormous in time compared to a one candle wave 1. You know what I mean? Which is not what we want to see. And that's again why it's so important to observe the reaction in this area in both the bull and the bear scenario. Because if you do reject here and you build bearish CVD divergences, well, we might have potentially an argument to move down, right? And then we are going to revisit lower prices. We're going to be looking for that in potentially either an ABC or a 1, 2 and much lower prices to come. But at the moment, we focus on this high. That has the highest, even if you move down and take the double bottom, this high has currently high probabilities of being taken. So this scenario doesn't look great because of the length in time of 2 compared to a very, very short one. And this is then the sub-degree count. So if you are looking for a wave 1 and a wave 2 for then a 3 down, of course, wave 2 has to be a 3-wave structure, which is then explained by this scenario over here. So this scenario is a WXY, complex sideways double combo structure, where in a wave Y, we have then a zigzag in W, WXY, zigzag in green W, zigzag in X, ABC in wave Y. Very nice, actually. It was a nice A, B, hitting the most common target of B, closing candles inside that most common target. 1.236 to the 1.38, taken from the high to the low of A, for then a 5-wave wave C to the downside. And then you want to see wave Y. But because wave W is labeled as a zigzag, wave Y cannot be a zigzag. It has to be either a flat, ABC, or it has to be a triangle. Well, clearly it's not a triangle. So the only potential alternative is a flat, where wave C is very extended. So if the blue C ends here, then what we have is a 3-wave A, B, C. this move on the very low time frame, if I go to the 1 minute, that sharp move down here, can be counted as a 3-wave structure. This is 1 minute stuff, right? So always on the 1 minute, take it with a grain of salt, but you can count this as a 3-wave structure. 1, 2, 3, 4, 5, A, B, C, and then you get your C. So it's a very long extended C wave. So it's a bit like, and it's of course it's 1 minute, but it's a little bit of a doubt if this is where the impulse ended, because over here you can count this as a 1, 2, 3, 4, 5, and then inside wave 3 you have another 1, 2, 3, 4, 5 basically. So yeah, not too easy to call that one. But in the bearish scenario, because wave Y already moved up quite high, preferably this is then in this scenario the low of C, and this is your ABC. So this is your expanding flat, ABC to the upside, where wave C did go, oh, those are 3 little dots on the chart. 1, 2, 3. Wave C did go very, very high for an expanding flat. Let's have a look. Well, actually, it reached a rare target. Or less common, I should say, which is the 2.618, which is still a target. Let me extend this a little bit for you. There we go. So the 2.618 on the chart that you see over here is a target for a wave C. Less common, but a target nonetheless, right? So you definitely want to pass that one. And the low of this wave B, taken from the high, low to the high over here, put on the wave B. Where is it? There we go. So also here, the 105 is hit. Less common for a B, most common is this area, but it is a area of interest. It is a target nonetheless. So this can still very much be an ABC to the upside, ending wave Y at the 886 for then a move down, right? Where this is then the high, has potential. So I keep coming back to the main area of interest at the moment is this scenario, and where's the bull? Oh wait, this is the bull scenario, and we have the, yeah. I know it's messy, but why I show this is because this area here is so important for both the bullish and the bearish scenario. That is the main thing, because the fact price hit the 886 taken from the high to this low increases probabilities that at a given moment you're going to take this high. Even if this is a WXY, probabilities are higher. You're going to start in an ABC and then return back up. Or you just do this, and you know, what are we talking about then? Let's see, let's check the CVD divergences here. So CVD moving down a lot as price moves down as well. As it stands, we do have bullish CVD on yellow. Yes, higher low in price, lower low on the CVD. So of course price could just continue pushing, not looking back, and take this high already. Now make sure you trade safe, because this range is quite a pain in the ass. You can also see with many of the different scenarios I've shared, it's not an easy range to count. But probability wise, the probabilities are at the moment higher to take this high, and then we really, and it's a very annoying thing to say, but then we have to wait and see what is the reaction at this level. Once you take the high, what's going to happen here? Because the resistance that I had is cleared. This wick cleared the point of control of these candles. My target boxes up here have been cleared as well, right? The next target box to the upside is at 30.5k here, and then 31.2, 31.1, and then we go all the way up to 34, 35k, right? There's like, there's no resistance here. I don't have anything here. So my target boxes, for the ones that are here more often, know these target boxes are very, very well respected. These are very important areas of support and resistance, where price always shows some sort of a reaction. It rarely happens. It just pushes through. The most recent, actually funny that I say this, the most recent example was here, where it did push through the target box. But it rarely ever happens. It's very important support and resistance. But the fact that this wick to the upside already cleared it, you know, will we reject here again? well, for me, I'm gonna play it safe, right? I have my trading strategy. I have all the rules. Like the moment we reach this area, it will take a couple of hours before I would even consider a short. But think about what you're looking for. Are you looking for a market structure change? If price can make it, first of all, up here, right? There's no certainties and guarantees in trading, only probabilities. If price makes it up here, then what are you looking for? Market structure change, RSI divergences, CVD divergences, stochastic, MACD patterns, whatever it is, trend lines, something that gives you an edge in the market. And yeah, at the moment, it's just probability-wise, it's higher to take this high at a given moment, which then means we really got to be careful here because it can as well just push up. And that's the question. Because we don't know if that might happen, of course. So, Mark Dutch. Okay, let's do a little bit of chatting. I'm already way over time. Shit. I was like, yeah, I'm going to be online for 30 minutes, and here I am 50 minutes later. That's what happens. That's what happens. Elliott Waves in a nutshell, Let me quickly go through your comments, and then I really have to go because I got a gym, gotta eat. We're gonna have burgers tonight. Gotta chill. Gotta go to bed. Okay. Pam. Drew Jarvis, what you doing, man? How you doing? What you doing? You're watching the stream. Good to see you. And indeed, you made it early this time. Good to have you around. 27,900 now. Take the double bottom, then 29.6. Yes, that is a possibility. Absolutely. So we now have a double top and a double bottom. So, which one is going to be taken first? I think the thing is, if the high gets taken first, observing the reaction for potential continuation is important. If the double bottom gets taken first, probabilities are still high to eventually take this high here. However, of course, you might first go down a bit and, we'll wait and see what happens there. But, yeah, the high here is of importance at the moment. Ionut Sandu, welcome. Good to have you here again. Card Crypto as well. What's up, Card Crypto? By the way, in Discord, Card, when you set like the what was it, the bullish CVD divergence, you're absolutely correct. Hey, you're absolutely correct that the bullish CVD, a second divergence, can play out. My bad for thinking it was a conclusion instead of course, just an observation. So no hard feelings there. Tommy Marin. Looks like a cup and handle. So I actually don't really trade patterns, because there's so many. I don't know. It's never really been a thing for me. There's many fake outs as well. So you probably mean this, and then something like this at the moment. Preferably, of course, your cup is going to be like fuller, and then you get this, of course, right? But yeah, there is the potential. There is the potential, absolutely. TM Skillet, this guy. So for the ones that don't know, I was a professional gamer in Trackmania for 11 years. If you look at for this name, Asa Koenz, or just the channel, really, if you look for Koenz online, you will see a lot of stuff. Also newspapers, interviews on TV, radio, mainly Dutch. But yeah, it's my background. I'm in the gaming and esports industry now for 17 years, and I also have my own business in the industry. And TM Skillet pops in and says, "Are you Asa Koenz?" He recognized my voice. What's the chance? Yabunga looks like bearish now. Oh yeah, well, yeah, okay. We of course went over the range now. Trackmania, Chill Fu, you know it as well. Algorithm, bring me back. Yeah, I mean, what's the chance, right? I know Spam and Massa. They are also in trading, also in their, like in Spam's Discord, there's a trading section. So I do know they're involved, but I don't know really any other players. So it's nice to see Skillet coming in. Christian, what's up? How you doing? Raymond, again with the X. I don't know why it's an X, because you're Raymond, right? Based on your screenshot. But what's up? Fundamentally, I tend for take the low option. Powell was hawkish. Yeah, like... So, if we... From an Elliott Wave's point of view, the nicest scenario is the ABC. From a theoretical Elliott Wave rule-based probabilities point of view, that's a whole mouthful, this is the best scenario respecting the rules. Or not necessarily, it's just probabilities. The thing is that locally you want to see this scenario being supported by seeing an impulsive structure to the downside, right? Because the flat scenario is a running flat, which is rare. Is it possible? Absolutely, right? That's why it's a pattern. That's why running flat. But it's not nice. And because it's a low probability scenario, and you then also start the move up with an expanding diagonal, which is also really uncommon, right? It's also a rare scenario. On the high time frame, if we even go up a notch, then what happened is from the low to this high, A or 1, you have a 3 wave, right? The flat ending on the 382. And the 382 is a less common target for a wave 2. It's a common target for a wave B, but less common for a wave 2, because the most common target for 2 is the 05 to the 786, which is down here, right? Which is over here. But we are far away from this at the moment. So currently price is at such an important level on the chart, this area here. Like what's happening here is gonna basically decide we either go for new highs or for new lows, which you can say, duh. That's always the case. It was the same here, it was the same here, and the same here. The thing is that from an Elliott Wave point of view, this area where we are right now is very important. So over here, probabilities were higher to get a retracement anyway, right? Over here, probabilities were higher to go down anyway. But now, now it's all about what happens on the smaller time frames, because the higher time frames don't really matter too much, as it depends so much on what is happening in this little range at the moment. Let me have a look here. So, yeah, it's all about what happens here. The coming days, weekend is coming up as well, right? If we get a big move, you want to have a big move before the weekend, because the weekend tends to range. Adrian Starfish, what's up, man? Diego, what's up? I will answer your message in Discord, Diego. I literally came back from a speaking gig. Oh yeah, for also people that are new here, my name is Koen. I am, besides trader, doing this type of stuff, Elliott Waves. I'm also a global keynote speaker, so that's why sometimes videos cannot be made or I'm late with like content. And I also have another business in gaming and esports. Which also sometimes leads me to posting later or not at all, but then I update people in Discord. Bitcoin going to 44k, 535 from all-time high to 15k, 8.5k Bitcoin bottom. Potentially. I did do a you can check my most recent cycle. So I did a full cycle count for people that are interested. I did a full cycle count on Bitcoin, including the macro and the high time frame analysis. So it's on my homepage in the playlist cycle analysis or something. So you will find it. Go to the homepage of my channel, scroll down. Because if you go to 44k, yes, that's still an area of interest for macro, bullish and bearish, and the reaction between 40 and 50k is important. But from a cycle perspective, it would make sense to, if you reach that area, you would continue up. We wait and see. No one is ready for the eternal crab market. Exactly. You want to see pain, and this is something that, look, I love seeing pain on the chart, and this is something that is it really this easy? Like everyone everyone buying because prices, like, is it really just gonna do that? Who knows? But what I would really enjoy, and I made this scenario when price was ranging here, is move above the trend line, have a move, as you can see, and then dump. People buy. They think breakout, next high, But this is a psychology scenario. It's not Elliott Wave minded or something. It's just like from a psychology point of view, Now people get bullish. They saw the wick, of course, and prices up here and buying, maybe go up a bit more buying. But does everyone win in the market? Is that like the new thing? I don't know. I would love to see a move down, but this is an opinion, right? This is no probabilities. This is an opinion because so again, and I'll repeat, I don't care if it goes up or it goes down. I don't care about Bitcoin 100K or Bitcoin 1K. I'll trade Bitcoin, right? I'm not involved. I am not a long-term investor and all that stuff. So I really do not care where it goes. But just from a psychology perspective, I'd love the fear. Price moving down. People thinking this is an impulse, 1, 2, and then a big 3. That's going to be their thinking. What do they think? They think we're going to go for lows. So what do they think? Besides this fake out, everyone being stopped, all the breakout buyers are being stopped because price moves down. The second scenario they're going to look at is this. Head and shoulder, yes. So, wait, head and shoulders? Well, yes, I was thinking about the hair product thing. Anyway, so yeah, you have this pattern as well, where the target is down here, all the way at 17.6. But instead then, you know, people get fear, price moving down, they're going to be selling, they're going to be like, oh, we go for new lows, 15K, da-da-da. And then that is the moment to fill the bags and go up. Create the hype, absorb the hype, bring it down, stop everyone out. Absorb the fear, move it up, stop everyone out, and use that liquidity for a big ass wave 3 or a wave C. I mean, you know, that would be very nice. So I'm definitely, if that happens, I'm prepared. If it doesn't happen, I'm also prepared. You know, it doesn't matter for me if it goes up or down, but it would be nice. Maybe at the same time, maybe it's like, psychology scenario can also be, of course, where people miss the boat, they keep missing the boat, and they still think it's going down, and they still believe in 15K or 10K. They still believe in 10K because we had to move down. But in the end, it's like, yo, see ya, we're never going back to 10K again. That's also a psychology scenario, right? Where instead of people getting the opportunity to buy lower, they don't. People are missing out. So the moment you take this high, they're going to be buying, right? Because they're like, fuck, missing out. Interesting. Nothing bearish about Bitcoin right now. There's always a bearish and a bullish scenario in Elliott Waves. So there's always something bearish. Diego, what's up, Koen? Thanks for the live update. Maybe a little off topic, but I was wondering, how are you so insanely consistent? You mean in trading or in uploading or in live maybe? Struggles with discipline. That's a deep question. Yep. So okay. My fiance is now going to prepare her gym clothes, and if I don't come down, I'm going to get my ass kicked live on cam here. Yep. She said, "You want to pop in to say hi? You want to say a quick hello?" Ah, she's gonna change and how? Are you sure? Just pop in your face. Okay. Oh, okay. Tell them I say hi. There you go. Actually, we had a premiere because in Diamond we had a stream where she did pop in, and for an hour she took over the stream for an hour in the YouTube Gold stream that we had last week. I was standing there, of course, talking as well, but she basically took off asking the questions to chat. But the thing is, Diego, can you write me this in Discord below your other question? Because I didn't have time to really answer questions. So please, wait, let me actually do this for you and tag myself just to make sure I'm not going to forget. So what I'm going to do is over here, I'm going to tag myself. There we go. And I'm going to answer this for you because I gotta go to the gym. There are a lot of charts. So Diego, I will get back to you either in another live stream or I'll write to you in Discord. Please clarify if you mean consistent in general or trading or other stuff. Contrarian, there are a lot of charts in the stock market where the 1 or 2 looks ugly and takes forever until wave 3 starts. Yeah, it's not always pretty. In the cycle count, that I did. Let me show it to you because I think people should watch that video because oh look, clickbait. If you go to the channel and you scroll down, this one, right, you will see that previous cycles started quite similar to what this cycle is starting with from 15.4K to where we are now. It's quite similar in time and price compared to previous cycles. And what you see in this video is you see the little bit of purple here. Those are like bar patterns where I copy old price action on current price action, and you will see very, very interesting comparisons. Powell speaking, Powell spoken, dovish, nothing special. Okay, could be a wave 4 instead of a 2 if you start with a deep wick. The problem locally for a wave 4 here is that it went so deep. So if this is like 1, 2, 3, 4, this being a wave 4, it did retrace to the 0.618. At least the news wick did. The rest did not, interestingly. But the news wick did retrace to the 618. So wave 4, yeah, you know, probabilities. But the fact that it retraced to the golden pocket gives low probabilities. So you can see the candle here hit golden pocket. And a wave 4, it's incredibly rare to have a wave 4 go to the golden pocket. 0.5 to 0.236 is most common. And usually my invalidation is the golden pocket. So yeah, that's probabilities. But Panda, welcome, by the way, if you start with the deep wick. Or we're talking about a different time frame because you talk about the deep wick. But in the end, it doesn't matter for the structure here. So even if this is a deep wick, I don't really know how we get to a wave 4 from here, because this, you then have to be 1, 2, 3, 4, 5, but that doesn't look great. Cup and handle, we answered that one. ES noob. Okay, quick. Absolute low could be in. Hardcore moon, potential. Do you do Elliott? Yes, I do Elliott Waves on alts, but only in YouTube Gold on Monday, because I don't have time during my days to do any alts or, you know, so I dedicate time for gold on Monday. Every Monday I do an alt or commodity or whatever the community votes in gold. I do that chart. But I don't really have time to do that in general, because it takes a lot of time to do good Elliott Wave counting, and I don't have that time besides my other activities. MT, what's up? Mark Dutch, he's a legend himself. What's up, man? Daniel, how you doing? Thanks for hopping in again. Koenz, how many hours a day do you sleep? That's a problem. I actually need to sleep more. I try to sleep 7, but usually it's like 6.5, I guess, which is short. I felt a bit stressed today, not gonna lie, guys, when I was actually going to my speaking gig. I don't know. I didn't feel too great. So yeah, I need more hours. Like tonight. That's why I actually have to go. Card Crypto, all good. Good evening. Woo, what's up, man? Newest diamond member right there, Mr. Woo. Badge is looking good on you, man. Thanks for hopping in. Hi, Espana. What's up, Broncos? How you doing? So what's your base case for price action now? Valsu, please, because I really have to move, please go back in the stream a little bit, because that's where I analyze the different time frames as well as locally. And local is the most important part. But first I go through the bullish scenarios and then the bearish scenarios, because I'm just trying to get through chat. Yeah, 15-minute cup and handle. Potentially, yes, that's correct. It might be max pain is reached when price breaks upwards all the time. Yeah, because people are missing out. Answer this one. I totally understand 40K to 10K. Yeah, exactly so, Foss. It very much depends on what happens if you're at 40 to 50K, right? You need something, or I'm not a fundamental analyst, but you know, at the moment doesn't look likely from a cycle perspective. Okay, Everyone, I caught up with chat. Phew, the more subs we get, the more difficult it will become for me. There will be a time where I can't keep up anymore. But everyone, thanks for being here. If you're here for the analysis, make sure to go back in time of the video, the stream, because that's where I went through everything, high time frame, low time frame, and especially the range, because this range is so important from a high time frame as well, high time frame Elliott Wave point of view. I just really want to say thanks for hanging out. Thanks for being here. I'm going to kick my ass to the gym together with my fiance, then eat some burgers, watch something, Beckham maybe, and go to bed. So yeah, thanks for being here. Appreciate you spending some time with me tonight, or for you to like this morning, afternoon, wherever you live in the world. I hope you have a great day. And we will see each other again tomorrow morning at 7 a.m. Central European time. I will be uploading another video. So let's see where price is and how we get into the weekend.